My name is Frank Chali. I'm a senior market strategist with RJO Futures here in Chicago, and today I'm here to talk about the gold market. And I'm starting to sound a bit like a broken record. If you've followed any of my videos in the recent months even, we're talking about gold trading around 1,200 bucks. Currently, June gold contract 1,206 and a half or so. It's up about $14. Market had a nice pop up this morning off of weaker retail sales, while the dollar broke hard off that number, went from unchanged to down about 60 where it's trading right now. So again, the gold is getting direction from the currency. You know, the dollar is what's directing most of the commodities right now. In a weaker dollar, we got to pop into gold. But here we are still. The market is stuck in a big choppy sideways range, somewhere around 1225 on the upside to 1175 on the downside. And again, you know, this is a good trading range, but the market's not really going anywhere. It needs some direction. We continue to pivot around 1,200 bucks. So we get to 1225, the sellers step up. We get below, down around 1175 or so, and the buyers come in. So until the market gets some longer term direction, we're going to be range bound for a while. But I do think that this market long term is basing a bottom. So I'm going to show you a couple charts here. You look at the daily chart, you can see this range from 1175 to 1225 is very clear. We pivot around 1200. But below that, I want to show you the longer term chart. We're going to look at a weekly chart, and you can see that this market is basing a long term bottom. That's my opinion, but I think that there's going to be some fundamentals behind it too. Physical demand is going to drive prices higher longer term. And at some point, inflation's going to kick in, and then that's going to get the market moving some more. So I think that there's very little downside exposure when you get into the 1175, 1160, maybe 1150. I think that's where the market is bound to, you know, bounce. And then at some point, we're going to get that pop above that 1225 resistance. We're going to go to 1,300. That's my intermediate term projection, $1,300 or so. And then after that, I think we're going to see the market get some momentum and perhaps revisit $1,400, even $1,500. Again, that's a longer term projection, and it's going to start with physical demand. The Bank of China is building their gold reserves. They have a very anemic amount of the world's reserves for a country that wants to be a super force in the global market. So I think that we're going to continue to see the physical demand from China. We're starting to see a pickup for physical demand out of India. They used to be the world's biggest consumer of gold. Their economy's grown at 9 or 10%. That is going to be a factor in the market as well. I don't know what the dollar's going to do longer term. If you know, the Fed doesn't want the dollar to move higher, then that's going to contribute and help boost prices also. So the chart, I think, is showing us that it's basing a bottom. We've been in a bear market for a few years now. Longer term, you know, the trend has been down for gold. I think that we got a bottom basing, and longer term prices will move higher. That's all I have time for now, but I'd be happy to answer any of your questions. You could give me a call, shoot me an email. Thank you. And as always, remember that trading commodity futures or options on futures involves substantial risk of loss and is not suitable for everyone.